For this month, the portfolio sits at $22,884 between both the stake and Vanguard account. That is Australian dollars. That is the equivalent of $15,503 US. First, looking at the stake portfolio, it sits at 12,342 USD, which is around 18,394 AUD. And looking at the Vanguard account, this sits at around 4,600 Australian dollars, which is around 3,118 US dollars. Quickly going through the portfolio, you can see not much has changed from the last month. Even looking at my recent transactions in this account, you can see the only things that happened in this month were first the dividend from JP Morgan, then Apple, then Costco, and then with the uses of these dividends, I bought a bit of VOO. As mentioned before, the only real goal for this portfolio is to get it to around 20,000 Australian dollars. At the moment, I'm about $1,600 off, and hopefully with this price bouncing back and I can get the total back to average, then only a little bits of deposits will be necessary. In comparison, with the Vanguard account, I have been making other transactions. As you can see, I did deposit some money, and last Thursday I did buy into the Vanguard Australian Large Company Index for $516. I will show a bit more about that. The goal for this portfolio for the Vanguard one is to get it to $10,000, meaning I do have a bit more work to do on this account than I do with my stake, while still growing my personal savings. To show you a bit more about the index that I bought, that was the Australian Large Company Index. I do previously own stake in this position, but I'm just growing it now because I believe when assessing my holdings, it's the one I do want to grow the most now. I know I've touched on it in previous videos, but it does just hold the largest companies in Australia. I believe it's the top 20, and you can see all the way from BHP to the big banks to things like Telstra. Overall, it offers a good dividend as well, strong proven record of returns, and yeah, as I grow my portfolio, it is a position that I do want to increase, potentially selling out of my Australian shares index. This is a bit more of a broad market, tracks a lot more companies. This is a bit more direct, fewer companies, not as diverse as the Australian share index. Yeah, the goal for this upcoming month with this portfolio is to deposit probably another $500 to $1,000, and again, probably invest into VLC and VGS, slightly maybe between VGS or VHS, because with this portfolio I am trying to grow the dividends. That is a big thing with this portfolio in comparison to my stake portfolio, which I will be mentioning some changes I will be looking to make, but this is a bit more growth orientated, as you can see with the tech positions. You can see there are 2 pending orders. Those are for Google and Amazon. I understand it's not a good time to sell now, but I did want to access a bit of capital, and these are 2 positions that I'm not really too excited about going forward. I do think there's good opportunity for growth, and I don't think it's the best time to sell now, but I do want to kind of set up my portfolio. The stocks that I was looking at actually have been in the news recently, and that is Union Pacific, and the second one is actually Canadian Pacific. These are both railway companies, 2 strong proven railway companies in the North American space. And that is another piece that I wanted to get into on this portfolio update, and that is around Union Pacific CEO stepping down. I know I'm a little bit late, this has been out for a little while now, but as I did transition my portfolio, I did want to move a bit away from the tech space, and you can see I do have positions such as Costco, JP Morgan, and then obviously VOO, which is my biggest position, but I did want to trim down on my tech positions and look at adding a railway company. And I know that might not be the most attractive stock in terms of people don't look at it the same way you look at Apple or Microsoft in terms of growth, but they've actually done extremely well. And before I get into the article, I'll even show you some of their track record. They've destroyed the S&P in recent years. I mean, you look, even a 54% return in the last 3 years for Canadian Pacific. And then in terms of Union Pacific, even a 32%. But that is what I'm going to be getting into. The Union Pacific CEO did step down as they were pressed by a major hedge fund, which I believe invests around $1.6 billion into the company. And yeah, it was actually a really interesting letter to the company. They've been reaching out privately, but they actually made this one public, and it is very good to read through. He goes through and says, "Dear Mike and members of the board, as you know, I've been a long-time investor in North American Class 1 railroad industry." And he goes through and kind of speaks around how long they've been investing. There you go, the $1.6 billion stake. And it does start off at a very nice tone, and then immediately it changes to the board needs to replace Lance Fritz for the best-in-class leadership. Lance Fritz is actually the CEO, or he was the CEO. He's now stepped down. And yeah, they're in the process of looking for the next one. They actually put a very good kind of breakdown here showing you how poor the company has performed in compare to its competitors. You see, that's CP's Canadian Pacific, the one that I was just looking at. You can see they rank it from safety, volume growth, revenue growth, cost management, EBIT growth, return to shareholders, and overall rankings, and they came dead last in every single one. But that does show you, if the worst company out of the 7 can actually have market-beating returns, then and beating around that 10% mark, then that is very positive for if you can get a change in leadership and you can diversify your portfolio, you can hopefully get this position up. And they do speak about how much they do want and believe that this change would actually benefit not just the investors but also the board members, and that is probably what's pushed them to, again, fire the CEO, even though they said step down. Another big thing they said here was, amongst all S&P 500 companies, UNP is rated by employees as the worst place to work and as the lowest employee CEO approval ranking. 500 out of 500, that is very difficult to, I mean, you look at the 500 companies, it's got to be upset workers everywhere, but to be ranked the very bottom one, that really does say something, and hopefully they can get this changed. They do continue a bit more of a breakdown of what they believe that the Union Pacific can actually achieve under the correct leadership. They speak about the EPS and potential growth 16%, and that does seem, you look through and you read this, it does seem pretty high, but under right management, I mean, they can really lift the share, and they believe it can basically double in the next roughly like 5 years. But that will be seen, and yeah, they did reach out, make this public, and that has got the CEO to step down. They even suggested who they believe should replace the CEO. They said here, they even speak about who they believe should replace the current CEO or prior CEO, and that is Jim Vena. They go through and kind of pitch their case of why he should be there. He was previously there, left, came back. Was there, and then he was let go, or not let go, he was let to walk pretty much. And they even showcased how good the company was doing when he was there, and then how poor again they did after he left. And yeah, as someone who is looking to diversify their portfolio, this is a position I will keep my eyes on. It had a major jump. It had a 10% jump as soon as the news came out that the CEO was going to be stepping down. It has pulled back again as the markets kind of have a 2.3% today. But yeah, that's kind of the decision I'm facing, is whether to put a little bit of that money into the Union Pacific, or even as I showed before, put it into Canadian Pacific, who were ranked second overall and probably a bit better of a run company. But in terms of trying to get the best returns, it could be good to get Union Pacific, because if they do get the correct leadership, that is when the stock will really blow off, and they do offer a decent dividend as well. Yeah, in regards with this portfolio, I might add another $500, but I'm not looking to add too much to this portfolio at the moment. Like I said, I'm trying to grow the Vanguard one and grow my savings over growing my stake portfolio, because it does massively outweigh my other positions. I mean, it's almost 4 times bigger than my Vanguard portfolio. Yeah, not much happened this month. Some dividends came in. It is always nice to see the dividends come in because you do see the growth. I mean, yeah, you look at the JP Morgan dividend, and I can change this to just dividends, and you go down. Yeah, you can see it's doubled pretty much since what it previously was. And that's the good thing about dividends. You can kind of track and see the growth of them and the growth of your payments. And this is money you're just getting for holding companies you do believe in. And these are companies hopefully I will hold for a long time. I do plan on holding this portfolio for a long time, hopefully growing it now, especially since I am younger. Compounding interest is on my side. But yeah, that's just a bit more about a portfolio update. In the next month, hopefully, yeah, this portfolio will be over $5,000, and this portfolio potentially over $13,000 if things go back up and with the investment. But yeah, combined they sit around, like I said, that $22,000, almost up to the 23 mark. That's all for this update. Again, like I said, I'll potentially be looking at adding into those railroad companies, but other than that, the portfolio will be staying pretty similar.